What's the rule for real account? Debit what comes in, credit what goes out. Rent comes under nominal account, cash comes under real account. What the nominal account says? Debit all expenses and losses, credit all gains. What the nominal account says? Debit all expenses and losses. Hello everybody, I am Dr. B.A. Subramaniam, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. I am going to handle the basic concepts of first year B.B.A. Financial Account. Fifth session is considered. In the last session, I have come across about the three accounts: personal account, real account, and nominal account. What is personal account? What is real account? What's nominal account? I have explained. So before starting journal entry, I would like to put forth once again what is personal account, what's real account, what's nominal account. A personal account is one which deals the accounts of person. A real account is one deals the accounts of property. A nominal account one which deals the incomes and expenses. There are some golden rules we are going to follow. There are three rules are there. One is for personal account, one for real account, one for nominal account. So what is the rule for personal account? Debit the receiver and credit the giver. What is the rule for real account? Debit what comes in, credit what goes out. What is the rule for nominal account? Debit all expenses and losses, credit all gains and income. These are the fundamental rules we have to follow. Which are the three rules are? Personal account, real account, and nominal account. What the personal account rule is? Debit the receiver, credit the giver. Debit means left hand side, credit means right hand side. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all gains and income. Now we'll go to journal entries. So problems on journal entries. What is journal entry? Journal is the first book, ledger is the last book. Splitting a transaction into two sides, one is a debit side, another is called the credit side, is called journal. An entry in the journal is called journal entry. What is journal? It is the prime book, this is the first book where all the business transaction will be entered. Journal entry means an entry in the journal is called journal entries. Now we are going to follow the journal entries. First one. Commence business with cash rupees 50,000 and bank balance rupees 1 lakh. Paid into bank rupees 80,000. If we see this now, who commenced the business? Mr. Charan commenced the business. How much he introduced? Rupees 50,000. Bank balance rupees 1. He put the money into the business. What is coming in? Cash is coming in. Check means bank balance is coming in 1 lakh. For commencement means capital. So what is the rule says no? Debit what comes in. What is coming in? Cash is coming in, bank balance is, check means bank account is coming in, bank is a personal account, debit the receiver, credit the giver. We receive how much money? 1 lakh. Totally how much you receive? 1,50,000 for the sake of capital. So if you want to pass the entry, what is coming in? Cash is coming in and bank balance of rupees 1 lakh is there. That is with the bank. That is, we have got 1 lakh rupees. Total how much you have got? 1,50,000. So what the rules you have to follow? Debit what comes in, credit what goes out. Commencement means capital. Who introduced the capital? Mr. Charan. The entry, cash account debtor, bank account debtor, to Charan capital 1,50,000. I will repeat. Cash account debtor, bank account debtor, to capital 1,50,000. Explanation, narration, we say explanation of the journal entry. Being business commence with cash and bank balance. I will repeat once again. He introduced how much money? 50,000 in the form of cash and 1 lakh in the form of bank balance. Total how much you have got? 1,50,000. Debit what comes in, credit what goes out. Which are the two accounts are? One is the cash, one is the bank. Introduction means capital is a personal account. What the personal account says? Debit the receiver, credit the giver. Capital is a personal account. What the personal account say? Debit the receiver, credit. He is the giver. His account should be credited. What is coming in? Cash is coming in, bank balance is coming. What's the entry to be passed? Cash account debtor, bank account debtor, to Charan capital to the extent of 1,50,000. Next entry. Paid into bank rupees 80. We are putting the money into bank. Which are the two accounts? Cash is going out. Who is the receiver? Bank is the receiver. Which are the two types of accounts are? One is the bank account, one is the cash account. Cash accounts comes under real account. Bank account comes under personal account. Who is the receiver? Banker is the receiver. Debit the receiver. His account should be debited. What is going out from Charan? Rupees 80,000 is cash. What's a cash is a real account. What the real account says, debit what comes in, credit what goes out. How much is going out? 80,000 that should be credited. Who is the receiver? Bank means banker is the receiver. What's the entry? Bank account data to cash account. I will repeat once again. Money has been put into bank account. Who is the receiver? Banker is the receiver. How much money received? 80,000. How much goes from the owner? Rupees 80,000 is a cash. What is the rule is there? Bank is a personal account, debit the receiver. What is going out from you? Cash, that should be created. Entry, bank account data to cash account. Then, bought goods for cash rupees 60,000 from Kiran. The word is bought goods for cash. We have paid that. Goods means purchases. We purchase the goods, cash is going out. If this word is not there, bought goods from Kiran, so we have to show the name of the Kiran. But for cash, we pay the cash to Kiran. How much you have paid? 60,000 for purchase of goods. What is coming in? Goods is coming in. Goods is called purchases. What's the entry? Purchases account data to cash account, being the goods purchased from Kiran. So what is coming in? Goods is real account. Then what's going out from you? Cash is going out. Cash is also real account. What the real account says? Debit what comes in, credit what goes out. What is coming in? Goods. Instead of goods, we say purchases. What is the entry? Purchases account data to cash account. Then on the fourth, we have got rent paid. We pay the rent. Which are the two items are? One is the rent. One is the cash. Rent comes under nominal account, where cash comes under real account. What is the rules to for which are the two accounts are? One is the rent, one is the cash. Rent comes under nominal account, cash comes under real account. What the nominal account says? Debit all expenses and losses, credit all gains. When you pay the rent, it is nothing but an expenditure. Your rent account should be debited. What is going out from you? Cash. Cash is real account. Debit what comes in, credit what goes. So that should be credited. So which should be debited? Rent should be debited. Cash should be credited. What's the entry? Rent account data to cash account, being the rent paid. Then goods sold to Asha rupees 8,000 and received a check. We sold the goods to Asha. Goods is going out. Goods is going out to Asha rupees 8,000 and receive a check, he said. We sold the goods. Goods is going on. Goods comes under real account. What the real account says? Debit what comes in, credit what goes on. Goods should be credited. What is coming in? Check is coming in. Debit what comes in. Debit check comes in. That should be debited. So we sold the goods to Asha rupees and received a check. We receive a check. How much goods is going out? 8,000. That should be credited as a sale. What is coming in? Check. You have to say, instead of check account, you have to write the bank account. So what is going out? Goods is going out, check is coming in. Instead of check, what you have to write? Bank account. Then what is going out from you? Goods. Instead of goods, no, we have to make the sale. When you receive is a purchase, when it's sold, it is called sales, you have to say. So bank account data to sales account. On the 9th, sold goods to Rajini rupees 20,000. So they have mentioned the goods. Sold goods. Goods is going out to whom? Rajani. So goods comes under real account. Rajani comes under personal account. What the real account says? Debit what comes in, credit what goes out. Who is the receiver? Rajani. Rajani is a personal account. What the personal account says? Debit the receiver, credit the giver. Who is the receiver? Rajani. Her account should be debited. What is going out from you? Goods is real account. Debit what comes in, credit what goes out. Goods should be credited, nothing but a sale. Who is the receiver? Rajani is a personal account. So what's the personal account say? Debit the receiver, credit the giver. Who is the receiver? Rajani. Her account should be debited. What's the entry? Rajani's account data to sales account. What's the entry? Rajani's account data to sales account. Then on 12th, cash received from Rajani rupees 20,000. Now we receive the cash from Rajani. What is coming in? Cash is coming in. From whom? Rajani. So what is coming in? Cash. Cash received from Rajani rupees 20,000. From whom you are receiving? Rajani. What is coming in? Cash. From whom? Rajani. Rajani is a personal account. So cash comes under real account. What the real account says, debit. What comes in credit? What goes out? What is coming in cash? That should be debited. From whom it is coming in? Rajani. Rajani is a personal account. Her account should be credited. What's the entry? Cash account data to Rajani's account. Then cash paid into bank rupees 8. You put the money into bank. Who is the receiver? Banker is the receiver. So which are the two items are? One is the cash, one is the bank. Who is the receiver? Bank. Bank means banker. Then banker comes under personal account. What the personal account say? Debit the receiver, credit the giver. He received how much money? 8,000. How much cash is going out from Charan? Rupees 8,000. Cash comes under real account. What the real account says, debit what comes in credit, what goes out. So entry, bank account data to cash account. Entry, bank account data to cash account. We'll move on to next one. 20th, sold goods to Ravi for cash rupees 15,000. We sold the goods to Ravi. Goods is going out to Ravi for cash 15,000. So we for cash here, no? We receive the cash. Goods is going out, cash is coming in. So goods comes under real account, cash also comes under real account. What the real account says, debit what comes in credit, what goes out. What is coming in cash, what is going out, goods is considered as a sale. What's the entry? Cash account data to sales account. Cash account should be debited instead of goods, sales account should be credited. What's the entry? Cash account data to sales account. Then salary paid rupees 10,000. Here the two accounts are, one is the salary, one is the cash. Salary comes under nominal account. What the nominal account says, debit all expenses and losses, credit all gains. And when salary paid is an expenditure, now how much money is going out? 10,000. It is considered as a cash. Cash comes under real account. What the real account says, debit what comes in, credit what goes out. When you pay the amount, cash is going out, that should be credited. For the purpose of salary comes under nominal account. What the nominal account? Debit the expenses. What's the entry? Salary account data to cash account. What's the entry? Salary account data to cash account. Then drew for personal use. Anything drawn personal use called drawing. We draw the money. Assume that from the bank, how much money? 6,000 we have drawn. What is coming in cash? Instead of cash, drew for personal use called drawing. So how much you have received? 6,000 from the bank. But who is the giver? Banker is the giver. What's the entry? Drawings account data to bank account. What's the entry? Drawings account data to bank account. Further capital introduced rupees 25,000 in cash. He introduced, Mr. Charan, further amount. How much money he has introduced? 25,000. So we are the receiver of the money for sake of capital. What is coming in? Cash is coming in to the extent of 25,000. Cash comes under real account. What the real account says, debit what comes in credit, what goes out, what is coming in cash, that should be debited. So further capital comes under personal account, debit the receiver, credit the giver. So capital account should be credited. What's the entry? Cash account data to capital account. What's the entry? Cash account data to capital account. Last one. Furniture purchased from Vijay rupees 10,000. We purchased the furniture. Which are the two items? Furniture, another is Vijay. Furniture comes under real account. What the real account says, debit what comes in, credit what goes out. From whom it is coming? From Vijay. Vijay is a personal account. Debit the receiver, credit the giver. So furniture is real account. Debit what comes in, credit what goes out. Who is the giver? Vijay. Vijay is a personal account. What the personal account says, debit the receiver, credit the giver. So furniture purchase. From whom? Vijay. He gives the furniture. So how much? What's the value? 10,000. Who gives? Vijay. What is coming in? Furniture. What's the entry? Furniture account data to Vijay account. So it can be passed in a column wise. No, we'll explain. Here, date, particular, ledger folio, debit, credit, visa. Which date it was entered? Which account should be debited? Here, particular subject accounts is there. Ledger folio means, ledger means book, folio means pages, debit side or credit side. It should be debited or credited. Here, which date was entered? Date of entry, particulars of accounts. That means which are the types of accounts are there? Ledger folio we won't entry. It's only for format, whether it should be debited or credited. We'll go for the entries are considered. We'll go one by one. First entry. Commence business with cash rupees 50,000 and rupees 1 lakh. So we receive 50,000 in the form of cash, 1 lakh in the form of bank. Totally how much you receive? 1,50,000 for the sake of capital. Which day it was entered? 1st January 2012. 1st January 1/1/2012. So what's the entry? What's coming in? Cash is cash account debtor. Cash account debtor 50,000. What is coming in? Bank account debtor 1 lakh. 2. Capital account 1,50,000. What's the entry? Cash account debtor, bank account debtor, to capital account. He introduced the cash, being cash and bank balance introduced. Being cash and bank balance introduced. This is called narration. Introduced for capital. So what's the entry? Cash account debtor, bank account debtor. This is all debited. Bank account debtor. This is the debit entry. Then to capital account 1,50,000. Being bank balance and cash has been introduced for sake of capital. We'll go back to the next entry. Here, first entry is over. Second, paid into bank. We paid the money into bank. Who is the receiver? Banker is the receiver. What is going out from you? Cash. So cash is going out. Who is the receiver? Bank. Bank comes under personal account. What the personal account says? Debit the receiver. How much money he received? 80,000. So how much going out from him? Rupees 80,000. Cash comes under real account. What's the entry? Bank account debtor to cash account. Which day it was entered? Second one. This is 2/1/2012. So who is the receiver? Banker is the receiver. Bank account debtor. If you see the amount, we can understand. How much money he received? 80,000. Bank account debtor, 80,000. To cash account, 80,000. What's the entry? Bank account debtor to cash account. Money paid into bank. Being, this is called narration. Being money paid into bank. What is this is called? Narration. What's the entry? Bank account debtor to cash account. Being money paid into bank. We'll go to next one. Second is over. Third one. Bought goods for cash rupees 60,000 from Kiran. We purchased the good. What is coming in? Goods is coming in to the extent of how much money? 60,000 for cash. So cash is going out. Goods is coming in. Instead of goods, we say purchases. What's the entry? Purchases account debtor to cash account on 3rd January. 3/1/2012. What's the entry to be passed? Purchases account debtor. $60,000. Purchases account debtor, 60,000. To cash account, 60,000. Being goods purchased. Being goods purchased. What's the entry? Purchases account. Instead of goods, what we write? Purchases account debtor to cash account. What's the entry? purchases account data to cash account. We purchase the goods, cash is going out, both are coming under real account. What the real account says, debit what comes in, credit what goes out. So purchase should be debited, cash should be credited. We'll move on to next entry. Then this over, paid into bank, bought goods is over. 4th January, rent paid rupees 6,000. We are paying the rent, how much money? 6,000. Rent comes under nominal account. This 6,000 comes under cash account. What the nominal account says, debit all expenses and losses. What is going out from you? Cash comes under real account. What the real account says, debit what comes in, credit what goes out. What's the entry? Rent account data to cash account. We'll pass the entry. 4/1/2012. What's the entry? Rent account data 6,000 to cash account. 6,000. Here, rent account data to cash account. Rent paid. How much rent paid? 6,000 being rent paid. This is called narration. So what's the entry? Rent account data to cash account. Rent account should be debited. Cash account should be credited. We'll move on to next entry. So 4th is over. This 3rd over. 4th over. So 6th one, goods sold to Asha rupees 8,000 and receive a check. So goods is going out, goods comes under real account. What the real account says, debit what comes in, credit what goes out. What's going out? 8,000, they should be credited. If we receive in the form of a check, instead of check account, we are going to write bank account. So how much goods is going out? 8,000. 6/1/2012, we receive a check, instead of check, we write bank account, rupees 6,000 from Asha to Asha's account. 6,000. What's the journal entry? Pass bank account data to Asha's account. What do you mean that? We receive the money from Asha. Being check received. Being check received from Asha. So what's the entry? 6/1. We receive a check from Asha to the extent of how much money? 6,000. What's the entry? Bank comes under personal account, debit the receiver. What's the entry? Bank account data to Asha's account. We'll move on to the next one. So 6th is over. Come back to 9. Sold goods to Rajani for rupees 20,000. Which are the two accounts are? One is the goods, one is the Rajani. Goods is going out. So going goods comes under real account. What the real account says, debit what comes in, credit what goes out. Goods should be credited. Instead of goods, we say sale. Who is the receiver? Rajani. To the extent of how much money? 20,000. On which date? 9. What's the entry? Rajani account data to sales account. Sold goods to Rajani rupees 20,000. When the name mentioned, he is the receiver. Who is the receiver? Rajani is the receiver. How much he has to pay? 20,000. Goods is going on. On which date entry? 9th entry. How much money? That is 20,000. On 9/1/2012. Who is the receiver? Rajani is the receiver. Rajani account data 6,000 to sales account. Goods sold to sales account. 6,000. I will repeat. Being goods sold to Rajani. Or we can say goods have been sold to Rajani. Goods is going out. Goods comes under real account. Who is the receiver? Rajani is a personal account. He has to pay how much money? 6,000. Narration being goods sold to Rajani. So I will repeat. Rajani comes under personal account. What is going out from you? Goods is going out. Goods account should be credited. Instead of goods account, we say sales account is there. Rajani account data to sales account. We'll move on to next one. So this over. On 12, cash received from Rajani rupees 20. How much cash received? 20. What is coming in? Cash is coming in. Cash comes under real account. What the real account says? Debit. What comes in? Credit. What goes out? How much is coming in? 20. From whom? Rajani. Rajani is a personal account. Debit the receiver. Credit the giver. What is coming in? Cash. That should be debited. From whom it is coming? Rajani to the extent of 22. On which date? 12th. This is 12/1/2012. We receive a cash account debtor 20,000 to Rajani account 20,000. What do you mean that? We received how much money? 20,000 from Rajani. There are two types of accounts. One is a cash account, one is a Rajani account. Cash comes under real account. Rajani comes under personal account. What the real account says? Debit. What comes in? Credit. What goes out? What is coming in? Cash. That should be debited. From whom it is coming? Rajani is a personal account. Debit the receiver, credit the giver. Narration, explanation of the entry being cash received from Rajani. This goes in favor of 12th entry. We'll move on to next one. 12th is over. Then 18th, cash paid into bank. We put the money into bank. So which are the two items are? One is the bank, one is the cash. Cash comes under real account. What the real account says? Debit what comes in, credit what goes out. Who is the receiver? Banker is the receiver. Banker comes under personal account, debit the receiver. So bank account should be debited, cash account should be credited. On which date? 18. So who is the receiver? Bank. Banker is a personal account, debit the receiver. What's the entry? Bank account debtor to cash account. 18/1/2012. 2012 is there. We receive the, who is the cash? We go for the entries, no? We see the entry. Cash paid into bank. Who is the receiver? Banker is the receiver. How much money? 8,000. How much cash is going out? 8,000. Entry. Bank account debtor 8,000 to cash account 8,000. Being cash paid into bank. Being cash paid into bank. So 18th entry is 18/1/2012 is over. We will move on to next one, 20th. Sold goods to Ravi for cash rupees 15,000. We sold goods to Ravi for cash. So cash is coming in, goods is going out. On which day? Cash comes under real account, goods comes under also real account. What the real account says? Debit what comes in, credit what goes out. So when you sold goods, what is coming in? Cash is coming in, that should be debited. What is going out from your goods? That should be credited. What is coming in? Cash, that should be debited. What is going out from you? Goods, that should be credited. Which date? 20th. What's the entry? Cash account debtor to sales account. What's the entry pass? Cash account debtor to sales of goods. We write sales account. This is a 20th entry, 21/2012. So we sold the goods. What is coming in? Cash. Cash account debtor 20,000 to sales account. To sales account 20,000. Being goods sold. Being goods sold for cash. So, which are the two types of accounts? One is the cash. Sale is nothing but goods. Cash comes under real account, whereas the sales means goods comes under real account. What the real account says? Debit what comes in, credit what goes out. What's the entry? Cash account debtor to sales account. We'll go to next entry. So, this entry is over. Then on 22nd, salary paid rupees 10,000. On 22nd, we paid the salary. Salary comes under nominal account. What the nominal account says, debit all expenses and losses, credit all gains and income. When the salary paid is expenditure, this should be debited. What is going out from you? Cash is a real account. What the real account says, debit what comes in credit, what goes so 10,000 should be credited. So which should be debited? Salary. Which should be credited? Cash. On which date? 22nd. So 22/1/2012. Salary account debtor to cash account. Salary account debtor to cash account. So we'll go back to the entry. See that how much salary is paid. Salary paid rupees 10,000. 10,000 is going out on which date? 22nd. Salary account debtor 10,000 to cash account 10,000. Being salary paid. Entry. Salary account debtor to cash account. Salary comes under nominal account. Cash comes under real account. Nominal account says debit all expenses and losses, credit all gains and income. What is going out from you? Cash. Cash comes under real account. Debit what comes in credit, what goes out. We'll go to next entry. So here on 25th, due for personal use rupees 6,000. Anything drawn for personal use is called drawing. How much money you have drawn? 6,000 from the bank. Assume that we draw from the 6,000. What is coming in? Cash. Instead of cash, we write drawing. How much money you are using? 6,000 from a bank. What is the entry? Instead of cash, what we write? Drawings account debtor to bank account. Anything drawn for personal use is called drawing. What's the entry? Drawings account debtor to bank account. Which date? 25th. 25/1/2012. What's the entry? Drawings account debtor to bank account. Assumption, we draw the money from there. So anything drawn from there. How much money you have drawn? We see that. How much money you have drawn? Drawn for personal use. 6,000 is drawn for personal use. Assumption, from the bank we have drawn. How much money is 6,000? So entry, drawings account debtor 6,000 to bank account 6,000. Being narration, being cash drawn for personal use. So anything drawn for personal use is drawing. What's the entry? Drawing account debtor to bank account. We assume that it has been drawn from the bank. So bank is a personal account, debit the receiver, credit the giver. So what's the entry? Drawings account debtor to bank account. We'll move on to next one. So 28 entry. Further capital introduced rupees 25,000 in cash. On which day? 28. The Mr. Charan has put further cash. How much money has put into me? 25,000. So 25,000 comes in the form of cash. Cash comes under real account. What the real account says, debit what comes in credit, what goes out, what is coming into business, 25,000 for sake of capital. What is a capital? Is a personal account. Debit the receiver, credit the giver. So whose capital? Charan capital. Capital account should be credited. What is coming in cash? That should be credited. On which day? 20. What's the entry? Cash account debtor to capital account. What's the entry? Cash account debtor to capital account. 28/1/2012. So we introduce 25,000 entry. Cash account debtor 25,000 to capital account. 25,000. Being further capital utilized. Being further capital introduced. What's the entry? cash account data to capital account. Mr. Charan once again introduce how much money? 25. What is coming in? Cash for sake of capital. Capital comes under personal account, debit the receiver, credit the giver. What is coming in? Cash, the real account. Debit what comes in, credit what goes out. What is coming in? Cash. You'll go back to next entry. Last entry. Furniture purchase from Vijay rupees 10,000. Here name has been mentioned. Vijay is a personal account, debit the receiver, credit the giver. Purchase from whom? Vijay, his account should be created. What is coming in? Furniture. Furniture is real account. What the real account says? Debit what comes in, credit what goes on. What is coming in? Furniture. That should be debited. From whom it is coming? Vijay, to worth of rupees 10,000. On which date? 30th. What's the entry? Furniture account data to Vijay account to the extent of 10,000. Which date? 30th. So 30th, 30/1/2012. What's coming in? Furniture account. Furniture account data worth of 10,000. From whom it is coming in? To Vijay account. To Vijay account worth of rupees 10,000. What's the entry? Furniture account data to Vijay account. What is furniture? Is a real account. What the real account says? Debit what comes in, credit what goes out. From whom it is coming in? Vijay. Vijay is a personal account. Debit the receiver, credit the giver. Narration being furniture purchased for cash. What's the entry? Furniture account data to cash account. I think you have followed. So if you want, you can go through once again. So commence the business means cash is coming in, check is coming in. What's the entry? Cash account data, bank account data to capital account. Next entry, paid into bank. Who is the receiver? Bank. What is going on from you? Cash entry. Bank account data to cash account. Bought goods for cash rupees 60,000 from Kiran. From whom you are receiving bought goods for cash, he say. What is coming in? Goods is coming in, cash is going out. What's the entry? Purchases account data to cash account. Then rent paid rupees 6,000. Rent is a nominal account, cash a real account. Nominal account says debit all expenses, losses, whereas cash is going out. What's the entry? Rent account data to cash account. Goods sold to Asha rupees 8,000 and receive a check. We sold goods to Asha. Goods is going out. Check is coming in. In subject, we write the bank entry. Bank account data to sales account. Sold goods to Rajini rupees 20,000. Name has been mentioned. Goods is going out. To whom? Rajini. Rajini is a personal account. What the personal account says? Debit the receiver, credit the giver. Who is the receiver? Rajini. What's the entry? Rajini account data to sales account to the extent of 20,000. On 12th January, cash received from Rajini. So cash is a real account. What the real account says? Debit what comes in, credit what goes out. How much cash is coming in? 20,000. From whom? Rajini. Rajini is a personal account. Debit the receiver, credit the giver. What's the entry? Cash account data to Rajini account to the extent of 20,000. Cash paid into bank. The money has been paid into bank. Who is the receiver? Banker is the receiver. Banker comes under personal account. Debit the receiver. What is going out from you? Cash. That should be credited. What's the entry? Bank account data to cash account. We'll go next. Sold goods to Ravi for cash rupees 50,000. Goods have been sold. It has been credited. What's coming in? Cash. What's the entry? Cash account data to sales account. What's the entry? Cash account data to sales account. On 22nd, salary paid rupees 10,000. We paid the salary. Salary comes under nominal account. What the nominal account says? Debit all expense and losses, credit all gains and income. When the salary paid is an expenditure, what is going out from you? Cash is a real account. What the real account says? Debit what comes in, credit what goes out. What's the entry? Salary account data to cash account. Drew for personal use rupees 6,000. Anything drawn for personal use called drawing. Assume that it has been drawn from the bank. So instead of cash, what do you have to write? Drawing entry, drawing account data to bank account. What's the entry? Drawing account data to bank account. Further capital introduced rupees 25,000 income. So Mr. Charan has introduced further cash to the extent of 25,000. What is coming in? Cash. Because of the capital is a personal account, cash is real account. What the real account says, debit what comes in, credit what goes on. Capital is a personal account, debit the receiver, credit the giver. What's the entry? Cash account, data to capital account. Last one, furniture purchase from Vijay rupees 10,000. We purchase the furniture. Furniture comes under real account. So from whom you have been purchased, Vijay is a personal account. What the personal account says, debit the receiver, credit the giver. How much is coming in? 10,000. What's the entry? Furniture account, data to Vijay account. Being furniture purchased from Vijay. It's a credit entry. Means Vijay is going to pay in further. So you have to remember three. One is personal account, one is real account, one is nominal account. What's the rule for personal account? Debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses, losses, credit all gains and income. I have gone through slowly all the entries. I assume that you have understood that entry. If you have a doubt, we can discuss in the next class also. So we come across the journal entry. What is journal? Journal is a first entry where the transaction has been split up into two sides. One is the debit side, another is the credit side. An entry in the journal is called journal entry. We have to mug up three what's called rules or golden rules are there. One is personal account, one is real account, one is a nominal account. What the personal account says, debit the receiver, credit the giver. What's the real account says, debit what comes in, credit what goes out. Regarding the nominal account, debit all expenses and losses, credit all gains and income. I think I have explained all the entries. This easy now. First you have to learn this. Which are the means? The three fundamental principles. Which are the three fundamental principles? One is personal account, one is real account, what is nominal account. What is personal account? Anything connected to person. What's real account? Anything connected to property. What's nominal account? Debit all expenses and losses. If you know, we can easy to pass the entry. And when you write on the bracket, it is nothing but narration, explanation of a entry. What is narration? Explanation of entry, which have been debited, which has been credited. So we have gone through everything now in detail. If you still has got a doubt, you can ask me a question in the next session. Till then, goodbye. Meet you in the next session.